Alrighty, welcome everyone. We're delighted to welcome our next presenters to the Money Metals and Mining Virtual Expo. Garrett Patton is a technical analyst and chief educator for ElliottWaveTrader.net, a live trading room featuring Elliott Wave analysis on market indices in stocks. The articles and analysis from Elliott Wave Trader appear regularly on SeekingAlpha, MarketWatch. Mr. Patton's focus is primarily on equity futures and demonstrating the capabilities of unconventional technical analysis. Also, we would like to welcome Zachary Mans, who's co-host of the Stock Waves and Mining Stock Service with the Elliott Wave Trader Trading Room that provides wave alerts and trade setups on individual stocks as well as miner model portfolios. He's also co-hosts the site's weekly Beginner's Circle webinar for new members. One of the founding members of the EWT site, Mr. Mans began working in finance as an investment advisor in 2008 and adopted the Elliott Wave theory. Garrett and Zach, thank you for joining us today.
Thank you, Jordan.
I'm going to stop sharing my screen, and Zach asks that you bring up your slides.
Does that work?
It's coming up. Oh, yep, we're all set. Stage is yours.
Right, perfect. So yesterday, Garrett and I were asked to also present today. We were really scheduled to present our metals and mining stocks webinar on Thursday, and so we opted to split it into two parts. So today we're going to go into a little bit more of a broader overview of how we apply Elliott Wave technical analysis to the precious metals, and we're also going to talk about platinum, palladium, and copper as well, and then get into a little bit of a broad overview of our expectations for the coming months and maybe year or so beyond in mining stocks in general. And then on Thursday, we'll do a quick recap, but then we'll be able to get into a little bit more in-depth of analysis on some of the individual mining stocks that we really like and that support what we're seeing in the broad index. And I think it's important to recognize that when you're looking at something like GDX or even the Huey, that is a combination of a number of different stocks. Some of those indexes are weighted, and so the particular patterns of a few names can skew the index into looking like one thing. And our approach that Garrett and I like to use both in Stock Waves and in the Mining Stock Service is looking at the hundreds of individual names and using that bottom-up approach that does have an effect on the way that we see the broader index, but also looking at what the broader index is telling us that could provide some headwinds or tailwinds for a lot of those individual names. But we're going to start with taking a look at gold, which most of the mining stocks are primarily gold producers. And gold is probably like the big daddy of the metals and has the biggest effect on the sector. Now, we do say a lot. We say each chart on its own. Things don't always move in tandem with the metals. The metals don't always move in tandem with each other. And there's some mining stocks that have different regional exposures, different political risks, just different sentiment. They trade, different market caps. And so the pools of investors, everything is very, very different. And the price pattern it affects that sentiment as well. It's both reflective and has an effect on it. So while we do look at things as a combination of an entire sector, and some commonality there, we do pay very close attention to the strengths and weaknesses of each chart, and that's one of the reasons why we opted to not do a trading service that just circled on metals and maybe GDX, but to have a model portfolio that was diversified among many of those individual mining stocks that we do like. So we have been very bullish, the metals and miners, really since we saw them approaching a major bottom back in 2015. And that's when we decided to start a service that was solely focused on the precious metals and mining stocks. So off of that low, we got a very strong move that we're going to count as our primary degree. And I'm going to speak a little bit of Elliott Wave jargon. And remember, Garrett is our chief educator, and we have a lot of educational material that helps our members learn how to even count for themselves, but certainly read and understand and know what we're talking about when we do use a little bit of that Elliott Wave jargon. The very basics is that things move ahead, they progress in 5-wave movements, and then they correct in 3-wave ABC movements. That's the very most basic thing. So off of that initial 2015 significant low, we did have a 5-wave move up in gold that we're counting as a larger degree wave 1. And then since then, we've been filling out the larger primary degree wave 3, which we use Fibonacci extensions and Fibonacci retracements a great deal in Elliott wave. And so that has really exploded, and we were, had a slow, long drawn out start into the 2018 low, but since 2018, we've really moved up very, very strongly. And we were looking for this 4th wave consolidation into the March low from the beginning of the year. So we were ready for that drop. And then we're looking for a 5th wave that was at least targeting the 1800s to 1900s. Since then, we really have set up for this very nice extended parentheses wave 5. That's an intermediate degree 5th wave inside of that larger primary 3 that we were looking at on the daily chart just a moment ago. Inside that move, we should still have 5 waves up because of the fractal nature of Elliott wave. So the way that we're viewing the metals charts, particularly gold right here, is that since the high that was struck earlier in August, it is filling out an ABC, one of those 3-wave corrective consolidations, for a 4th wave inside that larger move. That's going to set up the next buy opportunity as it holds support in the low 1800s, likely towards at least the next Fibonacci target level, extension level, which is going to be around 2160. And one of the things that we've noticed as we have tracked miners over the years, or metals and miners over the years, that the final moves often tend to get some of the most exaggerated extension. So this entire structure, as being the 5th wave of the 3, is very exaggerated from the minimal targets that we were looking for off of the March low. And the 5th wave of that, this blue wave 5, can certainly see further extension, potentially even towards the 2300s. So that's why we're very excited about looking for the rest of this corrective consolidation to set up a very high probability entry for that next swing higher. I'm going to zoom in one more level so that we can talk, as we mentioned, we look at things on a fractal basis. And so we want to see the same patterns repeating both at the smaller time periods within those larger structures that we see at the higher time periods. And so inside of this A, B, and what we're looking for the rest of a C wave structure for our blue wave 4 here, highlighting in blue to show emphasis that this is acting like a larger diagonal for that parentheses wave 5. We're looking for this C wave to continue to fill out towards normal wave support for a 4th wave, as well as normal extension for the C wave, and to have 5 waves down inside of that. And so the structure that we have off of the August 18th high in gold looks like an initial 5 waves down for the wave 1 of that C wave, a corrective bounce into resistance for wave 2, and trying to start to roll over right now towards the lower 1800s to fill out more of that 3, 4, and 5 to set up that very high probability entry for the next swing move, targeting new highs into the end of the year. Garrett, did you have anything you wanted to add on that?
Yeah, maybe just the initial support that we want to see taken out to begin placing odds in favor of that wave 3 of C beginning to fill out with a little bit more confidence. So I think getting below the low that was made into the end of last week, which you'll have to double check for me. I'm looking at your screen here, but I think that was around 1970-ish.
1914
a little bit higher, the 4th wave of what would be the C event.
Oh, too. Yeah, sorry. This would be
1965. It looks like about.
Yeah.
Yeah. Okay. So a nice sustained break there would be kind of the initial warning sign of weakness, and starting to confirm that wave 3 filling out, and then obviously below the low from where that wave 1 is should fully confirm that. and heading
And
down
moving
to
over,
probably 1850 at least for that third.
right. Yeah, I'm thinking 1844 is my 138.2% extension. And that's probably a very high probability target for the third, since we did have 5 waves down for that wave 1. Initially, we were hoping that it might be an ending diagonal with this as the wave 1, which would project and allow it to hold a little bit higher into the 1830s. But it does seem like the lower 1800s are going to be pretty likely. So we're going to move over and look at a very similar structure on silver, at least in terms of the 5 waves up off of the March low. But the March low was a more significant bottom, was a much more severe bottom for silver than it was in gold. And so it is not part of a 5th wave of a larger pattern that is continuing. It might be the start of something much, much more bullish. And we've talked a little bit with our members about the gold and silver ratio, that we do like to see things, return to mean levels every once in a while. But we did see a very nice 5 waves up off that March low, and a initial corrective consolidation that got to about minimum support levels that we look for, that was setting up for a very nice move to the upside. So that's filling out as 5 waves up as well, and are looking for more of the same degree 4th wave, even though it might possibly be in wave 1 of an even larger move starting. But in the shorter time period, instead of holding from the August 18th high as a corrective bounce for that wave 1 and wave 2, silver pushed a little bit higher in a more complex variant pattern for this B wave. But is still trying to roll over in a similar manner to gold to get that C wave down. And so even though we only need the 3, 4, and 5 of the C wave in gold, we could still see silver fill out 5 waves in a similar manner. And the ideal support region for that ABC flat consolidation for a 4th wave in silver to set up the next swing there is going to be the 2270 region. And then we'd be looking for, unlike gold, where we'd be looking for an ABC move up for that 5th, silver should be a 5 wave move targeting the low to mid 30s for that 5th wave up.
And silver in isolation is probably the easiest chart to at least consider, that all of the 4th wave may have already completed at that August 11th low. We use, as Zach was saying earlier, Fibonacci retracements and extension levels to come up with our targets for the subwaves within these counts. And that pullback came very close to a 38.2% retracement of the wave 3. And based on our analysis, what we see, across various different charts as a typical target for a 4th wave, that is the 382 retracement. So, and we also have a possible 5 waves up, at least in that initial high where that W is on your chart. Yeah, that one right there.
Right.
So again, in isolation, it is at least worth considering on the silver chart that maybe that did complete all of the wave 4. But then when you take into consideration the GDX chart, which we'll get to, and the gold chart, that still leaves you, based on those 2 charts, with the probabilities or odds still seemingly in favor of just an A wave down, B wave bounce, and we'll fill out a wider 4th wave with that C wave back down again.
And we're going to go and take a look at some of the other metals charts first. But I just want to talk briefly before Garrett gets in and talks about some of the potential larger risk that we see for the sector. But I have this green wave 1 here at the end of the 5th wave. After 5 waves up at 1 degree, we're going to look for an ABC correction to be something more bullish. So an ABC after we get to the low to mid 30s, holding in the mid to low 20s would be a very, very bullish setup as a possible green parentheses wave 2, setting up for a move that could take silver into the 50s. But as Garrett's going to show you after we look at the other metals, There is something to be concerned about the structure of being 5 waves up, completing something a little bit more bearish in silver, making the ABC consolidation not reliable from the start. I certainly wouldn't want to be holding significant exposure, and certainly not significant leveraged exposure to silver, relying that it's going to hold support in those low 20s from the 30 region. I would much rather take my profits on silver and silver related things and set some key stops for, potential for it to continue higher, and then look to reacquire once it confirms holding that support. Platinum. For some reason, IQ feed has weird coding, so it codes platinum futures as QPL, or Q's in front of my metals commodities. So platinum also could have made a very substantial bottom as a very large cycle ABC degree moved down into the March low. It gave us an initial 5 waves up, a corrective retrace into the 38.2. Since this was a little bit shy of that 38.2% retrace, we were allowing for the potential for this to be a B wave and then getting a C wave down and a wider flat. But when it got that little push higher over the 1000 region from the July high, that gave us 5 waves up as our green wave 1 inside the parentheses wave 3. We have retraced enough, hit the 50% retrace just under 904 to be an ABC consolidation for all of a green wave 2. So far, we don't have a clear impulsive start yet to the 3 of that parentheses wave 3 in platinum. So we're allowing either for this to be a choppy, what we call a leading diagonal, into the 1020, maybe all the way up to 1080 for wave 1 of this 3, and they can consolidate and then turn up strongly. Or this could be another B wave, allowing for a deeper retrace towards the 870 or 840 region, for a little bit of a wider correction for this wave 2. But a lot of very, very good risk reward. Unfortunately, a lot of the individual platinum names, and we'll talk about a little bit more of that on Thursday, don't have the cleanest setups because they're much more thinly traded, because things that are more pure platinum by themselves. But there are a lot of bigger names that do have a significant amount of platinum exposure. And we actually took, back here in May and June, we took positions in SPPP, the Sprott ETF that tracks, or maybe it's an ETN, that tracks platinum and palladium, because we like the setups there. Moving on to palladium. Palladium we feel is closer to the end of a large degree move, but there's some substantial room for it to continue higher, possibly even up into the 4600 region for a larger cycle degree wave 3. We've also been following this bullish setup off of the March low, but since the larger structure here is a diagonal, our 5th wave of the C wave and an even bigger diagonal should be an A, B, and a C wave move up. That C wave of just the A there, we've been tracking off of the May low, and that's when we also entered that SPPP position because it gave us exposure both to platinum and palladium. We've been tracking it as this blue ending diagonal, with it holding support recently for a B wave inside the 3rd. Should head towards the 2630 region and then hold the 2200s from there and pop up towards 2990s to complete the A wave in this larger 5th. So right now, holding ideal support should continue to hold the 2100s as that heads higher for platinum. Anything to add there, Garrett?
No, I don't think so.
All right, and then we'll briefly take a look at copper. Copper, I have potential that I have not taken off of my chart for a more nested bullish structure. But I am, because of the price action that we've seen off of the March low, I'm starting to lean a lot more to what I had as an alt orange count, but has been Garrett's primary for quite a while. Garrett and I do maintain independent counts from each other, Most of the time we end up counting things almost identically, but we do maintain our own counts, and that allows us to kind of compare notes and as we review things when we manage the portfolio and present in the service, and we feel it keeps us very intellectually honest. So there is still this potential for a nested, what we call a nested setup. That's where inside a larger cycle degree, wave 1 and wave 2, we have a primary degree, wave 1 and wave 2. And inside of that, we can still count this as the parentheses wave 1, needing a consolidation for wave 2 to really be reliably very, very bullish. More likely, though, is that this is an A wave, this is a B wave, and this is starting an ending diagonal for this orange C wave up that could be in a wider flat of something a little bit more bearish that we'll let Garrett use his longer history in just a minute to go over those. But for any of these counts, for us to have a reliable projection to head higher in copper, we really need to see a retrace back under the 260s to have, and that needs to be a nice clean ABC structure to have a reliable support to base new projections off of. So it extended past our ideal targets, and that stretched it into looking a little bit more like an ABC. But it's, even though it looks like it should be an alt orange C wave, still has a lot of bullish potential over the years to come, provided it gives us that retrace. All right, Garrett, I'm going to stop sharing and allow you to share and go over the even larger degrees and some of the concerns that we see, and then we'll talk about minors and leave some room for questions.
All right, can you see my screen, hopefully?
Yep.
Perfect. Let's go ahead and start with gold, I suppose. I'm going to zoom out very far here on gold. This is the chart that I have the most history on. Going back to basically the Great Depression, and pretty much all commodities, I'm viewing, personally at least, that is where a much larger degree, in most cases, super cycle impulse has started from. In the case of gold, you can see here that off of that 1933 low, 1933 low, it can count as this large 1, 2, 3, 4, and potentially fifth wave off of the more recent low that was made in 1999 here, where that potential supercycle wave 4 completed. So based on that large degree pattern, as Zach was saying, there is definitely concern that once the 5 waves off of our 2015 low completes, that could be a fairly significant top, as that supercycle wave 5, even potentially setting up, multi-decade corrective action that doesn't really take price, in any sort of longer term trending move, and just is chopping back and forth with overall downside bias. So definitely a concern longer term regarding that larger degree potential pattern, but for trading purposes, as far as managing our portfolio and looking at the shorter term moves, that's not something we have to be concerned about until later on when the rest of this pattern fills out. So we're still looking, as Zach was saying, for another push higher to complete what would be the potential primary wave 3 of the impulse that began off the 2015 low. And then from there should get at least one more 4th and 5th wave before that larger degree pattern is potentially a concern. And then let's take a look at silver. I don't have that longer term data, but we can just look at the move, the price action that has unfolded since the last bull market top in 2011. The move down that we had into the 2015 low was pretty similar to gold. We started off initially higher like gold did off of that 2015 low, but then silver from there just didn't really participate with the same amount of enthusiasm that we saw in gold, and never really got ever back above that high that was made in 2016, eventually in March, breaking back below and making a new low below both the 2018 and the 2015 low. So zoomed out here on the weekly chart, a much different looking price pattern than what we have on the gold chart, which has been in a nice established uptrend since that 2015 low was made. So overall, the concern here is because that lower low that was made in 2020, that potentially gives us a bearish interpretation of the pattern based on Elliott wave analysis, that this whole structure since 2015 is corrective, still part of an even larger corrective structure off the 2011 high, where this is a big A wave down. Remember, we were talking about 3-wave ABCs for corrective structures. They moved down into that 2015 low, a big A wave. This whole structure since then, a B wave, to be followed by a C wave back down again that will eventually undercut the March low and maybe even take us down to single digits. But once again, not something we have to be overly concerned about until the price pattern off of the March low completes. Now I have a slightly more optimistic interpretation, I think, than what Zach was showing in his chart, where this next fifth wave could complete the entire 5 up off of the March low. I am allowing for one more 4 and 5 to fill out, kind of similar to another 4 and 5 allowed here on the gold chart. And then again, this is where really I think exiting positions, and even here, I wouldn't want to hold a full-sized position in silver, anticipating fourth wave pullback. But if we do fill out another fifth wave from there, this is where risk really becomes pretty significant to the long side. Depending on where we do end up topping, it doesn't necessarily have to be right at that 3650 level, but even under the bullish interpretation, you'd get a decent sized correction as a wave 2, and that potential to head down in a more impulsive manner as a C wave that can take us back below the March low made earlier this year is something, again, that I think is worth at least being aware of the possibility of. So did we want to move on to GDX now?
Yeah, let's take a quick look at GDX and just kind of tease that for our more in-depth look at the miners on Thursday, and then we'll take some questions.
Okay. Actually, let me quickly glance at copper here. I'm having a little bit of problem with my feed recently. Yeah, it's not going to have the right count on it. I have my count on the other chart here, but I can quickly show it to you guys from here. So there is, and I know this sounds counterintuitive when I say that if copper continues to head kind of immediately higher without giving us that pullback that Zach was showing on his chart as a wave 2, that it's bearish in a sense, because it ultimately leaves us with lower overall targets if this is a B, and C wave corrective flat in copper. And kind of, so again, if this continues to just subdivide immediately higher and just needs another fourth and fifth wave, that would take us to the minimum target for a C here, and potentially be all of the move up off of the March low into somewhat similar B wave as silver to then send us back down in a much more bearish pattern. So again, it sounds counterintuitive, but holding higher level consolidations and really not giving us a significant pullback, and instead kind of continuing to subdivide higher on further and further negative divergence, longer term could be more bearish for copper than the targets that we would otherwise look for if we get the 1-2 off of that March bottom. So let's go ahead and move on to GDX. This is usually the kind of benchmark that we use for the mining stocks overall. I mean, it's the most popular traded ETF. We also take a look at GDXJ. We look at the HIWI as well. Even some of the ETFs that are and indexes that are traded on the Canadian exchange as well, where a good majority of the individual mining stocks are traded. So as we can see here, it's kind of a mix between the gold and silver chart as far as the overall pattern on the weekly here. In this case, we bottomed a little bit later in the beginning of 2016. We have that same initial strong move to the upside is what is being counted as that primary wave 1. And then the March low on the GDX chart unfortunately undercut the low that was made in 2018. There are a decent amount of individual mining stocks that ended up holding that low. So we can count the primary wave 2 complete in 2018 and then a 1-2 start to primary wave 3 on those individual stocks that again did not make a lower low in March and instead held above that 2018 low. But in the case of GDX, we do have to count the March low as the primary wave 2 because it was a lower low. And we're dealing with a similar third wave to the upside since. And good alignment with what we're seeing on the gold and silver chart with the high that was made recently at the beginning of August, completing a third wave and now working on a fourth wave consolidation or pullback. And this is one of the reasons why looking for another near-term move to the downside as a C wave to fill out a little bit larger fourth wave makes sense on both the gold and silver chart because it really makes a strong argument here on the GDX chart for a deeper, larger consolidation needed based on the rest of the structure.
Hey, Zach and Garrett, it's Jordan. Can you hear me okay?
Yes.
We're just about out of time. Do you want to finish this thought and let's take a question or two?
Yeah. Well, we would have 10 minutes for questions from here.
The presentation's actually till 12:20, so we're actually right at the end. I didn't want to cut you off.
12:30, excuse me. Yeah, we can go ahead and take a question. We can pick this up on our Thursday video.
Yeah, and I just want to let the audience know, as a friendly reminder, there will be a part 2 to this session on Thursday. So, you know, Zach and Garrett will be going a little bit more in depth in this session as well. So if we don't have time to answer all your questions, you will have a second chance to ask questions with them on Thursday. But let's jump right into it. When do you project the next buy opportunity for gold, if you can see that on a chart?
So as Zach was showing earlier, in the low kind of 1800 region, right around 1800 give or take, is where we're looking for ideally the next opportunity to enter.
And maybe by the end of September, but you know, certainly by mid-October, we're looking for that to fill out. The rest of the C wave down could actually fill out pretty fast and even be done by, you know, in the next 2 or 3 weeks.
Excellent. If they want access to your charting software and some of the different charts you went through, how would they receive that?
We post all of our charts in our mining stock service on our lawavetrader.net site.
Both of us use MotiveWave charting software though, and we do have I think we have an affiliate offer still through our site to get a slight discount on their service. It's really software designed for people with Elliott Wave charting in mind, so we really enjoy using MotiveWave.
Excellent. Well, gentlemen, I want to thank you. That's all the time we have for today. We appreciate both your guys' time. There'll be a part 2 to this session on Thursday for the audience to join back and ask additional questions. Thank you guys for joining us today. We really appreciate it.
Jordan,
thank you for having us.
Much.
All right, we'll talk soon. Thanks, guys.
Take care.